From Wall Street to Main Street to help small business owners have the same capital as corporate America and give them the same resources as a larger company. We cover business funding, business credit, scaling, business consulting, and much more. Check out the website at shieldadvisorygroup.com. Welcome to the show, The Liquid Lunch Project.
Lou, I am so excited. You're going to get a masterclass in Airbnb today.
Matt, the only I'm excited is because there are few companies that have disrupted their industry as Airbnb has for real estate. And there's nothing better than we like on a daily basis than a good old-fashioned disruption. And to walk us through this disruption that Airbnb has caused is John Bianchi, also known as the Airbnb data guy. John, explain to the novices out there, myself included, what Airbnb has done to the real estate market in America.
John, before you do that, let's just be clear here. We need to change Luigi's mind and get him away from that long-term rental mentality and bring him into the short-term world.
Cap rate.
Yeah, but what Airbnb's done is they made homes into a different asset class, like at least a portion of it, right? Now, I always say the vast majority of homes are not better off as Airbnbs. There's only a few that actually are good Airbnbs, profitable Airbnbs, because it's still dependent on tourism and demand. And so you need to be in the right location with the right product, right bedrooms, bathrooms for people to actually like want to stay at your place. Airbnb, all Airbnb's done is taken like a small portion of the real estate portfolio, real estate out there, and created a way for it to actually make a little bit more money, which allows there to be another section or another subsection of ways to make money off of real estate, right? But it's not like every single place in the world should be an Airbnb or turned into an Airbnb over the years.
You know, John, I'm super impressed with your story, man. You know, you actually would do an Airbnb arbitrage out of Chicago, right? COVID hit, the world went to an end. Everybody was leaving these inner cities and, going somewhere else. And, I'm sure you struggled a little bit. Can you tell us a little bit how you got started in Airbnb arbitrage? And then we can go on and tell the audience how you became head of data for one of Canada's biggest short-term rental investment companies.
It started off with just straight out of my own bedroom, out of my own place. I had an extra room, and I put it up on Airbnb, and I was, living with random guests, and I ended up covering my own rent just by renting out that extra room. And I thought that was pretty awesome. At the time, I wasn't a financial advisor overseeing a portfolio of $10 million of other people's money, and I didn't like what I was doing, so I was looking for something else. And so I started looking into, is Airbnb viable as like an actual business or to pick up more homes? Figured out that there was actual business model back there. Opened up a couple of homes. Turned out that was, used the experience of opening those homes to raise more money to go open up even more homes in Chicago. And that's where I sort of built up the arbitrage business, built it up to like 6 to 8 arbitrage contracts. And then the rest were all management contracts where I was taking care of other people's Airbnbs for them. And then, COVID hit and everything fell apart and I sold off that business. But the thing that I did really well was understanding the data and how to hand select which homes and which ones to turn down, right? Especially when it came to arbitrage, because you have to make a certain amount of money for it to be profitable, because you're taking on so many expenses such as the mortgage and the cleaning and the utilities and all that stuff, right? And so I understood it really well, and I talked to a lot of other Airbnbers and realized they didn't know it well. So I created this course. I put it out on YouTube for free, and then thousands of people have gone through it and watched it. And from that, it actually turned into an Airbnb data consulting business. So a little thing I was doing on the side where I was just consulting with a ton of people. And then it eventually led me to this company, Superhost Labs, which is, so you said it was a Canadian company. It's actually an American company.
Sorry.
Yeah, no worries. I'm a Canadian. I just work for the Americans. And so it led me to these guys, and I kind of showed them like what I did, how I do stuff. And they offered me a position that like I couldn't turn down. I was super intrigued by. So picked up that position, been there for about 2.5 months now, and absolutely love it and love what we're doing. The company's raised about 16 million in 6 months, and we've bought in 40 homes since then. I think we're launching like 10 to 12 this month.
So, John, can you explain for the audience what Airbnb arbitrage is? Because I think the audience may not totally understand that terminology.
Yeah, sure. So arbitrage is you rent out somebody else's home and then you put it onto Airbnb and you hope to make more than the rent and expenses that you're paying, right? So I was renting out homes for about $3,500 a month in Chicago. With all of my other expenses, it came out to about $70,000 a year. But the places were making about $90,000 to $100,000 a year in Airbnb revenue. So that little difference there is the arbitrage, and that was what I was able to keep.
So you were bringing in close to $30,000 in net profits on the apartments, right?
Per location. I was going for anywhere between 20 and 30,000 was the goal. Now, I'll tell you right now, I love the data. I went through the data like crazy. I tried to pick out the best possible homes, and I still got it wrong about 50% of the time, which means I had some that hit out of the park and some that lost money, right? And so like with arbitrage, it's really a long-term game. I was only in it for 2 years. If you're going to do arbitrage, you got to do it for like 5 to 10, because you're going to pick up some homes that are going to work out for you, and you're going to make your money back in 1 year. And then you're going to pick up other ones that are going to fall apart, and you're actually going to lose money on them. And you have to then pick up that furniture and find it a new home that you can then put it into, and eventually, hopefully, that home works. And then you're compiling those homes that do work, and they last over a long period of time. That's where you really see your cash flow.
John, are you seeing any particular areas in North America that are showing very good returns, where you're getting a lot of bang for your buck when it comes to the Airbnb world?
Tons. So like there's the way I kind of explain it is like almost every area is investable, right? Now, I've already said earlier on this podcast that the vast majority of Airbnb homes are not better off as Airbnbs. They're fine as single family homes or long-term rentals. But almost every major metropolitan has some sort of pocket where an Airbnb does well, whether that be on like a sort of corporate rental type model or like a true Airbnb. Almost every like downtown core will have a pocket that does better off as Airbnbs. And then the vacation rental markets, right? So like your Blue Ridge, your Gatlinburg, your Poconos, like all those kind of spots. In those areas, there's obviously a crazy amount of demand for Airbnb because they're vacation rental areas. But even in those spots, you really have to be strategic and selective about which home you're picking up and for what price, because you can really easily overpay for a home in that area and not even realize it. So as a very quick example here, in Blue Ridge, if you have amazing views, like truly spectacular views, you're going to make $50,000 more a year than the person who has average views. And that's with the exact same cabin, exact same size, everything. It's a $50,000 a year difference, right?
Wow.
Yeah.
So, John, these little tips is what we can expect when we get a report from you.
So I won't be directly giving you tips. What you'll get is the report, which I refer to as a tool that you can use. And then you have this video training that teaches the process that I use on a day-to-day basis about how to dissect a market, right? Like how to truly understand the market and be able to spot these things, right? And so you get the tool, and then you get the training that teaches you how to actually use that tool. And once you know how to use the tool, you'll be able to figure out all these different little things.
Yeah, Lou, I've been using a couple of these different tools out there, and a lot of them are clunky, right? They throw numbers at you. They throw a lot of data at you, but if you don't know how to read the data, you got to do a search for it. That takes more and more time. And there's nothing out there that truly teaches you how to extract the data you need versus the data you want. Everybody looks for high numbers, but they don't do the analysis of, before the show, we were looking at one that was a 3-bedroom was making $90,000 a year, where a 4-bedroom was making $96,000. The 2-bedroom was making $35,000 a year. So that's a big gap between the 2 and the 3, but not that big of a gap for the 3 or the 4. So in a situation like that, you would want to look for something that has a 3-bedroom because the price point is going to be cheaper and you're going to yield a better return.
Yeah, 100%. That's the idea of those reports, right? To be able to get that kind of insight on that. And mind you, we looked at that at a high level. Once you actually dive deeper into that, the numbers start to get different, and the amenities is really what you're looking for, right? One amenity is going to be driving the most revenue. What do people really care about? It's tourism, right? It's not, people don't care about bathrooms. You don't even have to fix up your bathroom, but you better put like a beautiful hot tub in the backyard. You know what I mean? the way you spend your money when it comes to short-term rentals is just different than long-term rentals. People care about different things, and you always have to put your mind in the mind of the guest, right? You have to put yourself in the mind of the guest. What do they care about? What are they looking for, right? Is there 12 people, and do you have a lot of space for 12 people? Because you're going to need it if 12 people are going to book out your home, right? Little things like that go a long way.
You know, it is. So I've taken a couple courses. I've listened to a lot of mentors and gurus on this, and everybody seems to have different opinions. But from my own personal analysis, I've seen vacation rentals do better in drive-in locations, meaning where somebody from Alabama will drive down to Destin, Florida, right? Not somewhere you're normally taking a flight to the majority of the time. Do you see that in your analysis at all?
Well, the first thing that comes to my head is like almost every area is drivable technically, right? So that there's a lot of variables to that logic, right? But what I will say is that how long have you been looking into this and doing Airbnb for and kind of sorting through everything?
I started playing around looking into it in about November. I closed on my first Airbnb at the end of January.
Gotcha. So the reason I ask is because COVID changed the landscape of Airbnb for the past 2 years, and what mattered was drivable locations, right? So there were pockets outside of LA, New York, Chicago, tons of places in Florida where if you could drive there, you were going to make money, and you'd be and people were coming, and if you had a home there as an Airbnb, you were making a ton of money, right? As of May of 2022, that is completely flipped. Like, and like directly on May. And the reason being is because Airbnb made the biggest change to their platform that they have in 10 years, which changed the way that people went and searched for Airbnb. So it just kind of changed up the game a bit. But on top of that, COVID is kind of over in everyone's mind, right? And no one's really thinking about it. No one really cares. Everyone's comfortable being around people. You're okay to be in groups. And so for 2 years, we've been escaping everybody and going to these secluded areas. But now everyone's comfortable with going back to cities. And so I have a chart, and I can show you it after the show, but the cities are just sort of like rebounding like crazy. It's a crazy overcorrection.
It's funny you say that, because Airbnb came out with their numbers this week, and one of the things that they said in their conference call was that they're seeing cities starting to rebound. The trend's going more towards cities again.
It's crazy. So like Milwaukee is up, I think it's like 56% year over year for the past 3 months, which means that if you were planning on making 10 grand in June of if you made 10 grand last year in June, this year you made 15 grand, right? It just like shot straight up. And whereas these places like Blue Ridge and the Poconos have completely like lost like 30 to 40% of their revenue year over year, right? And it's just kind of gone away. And our theory here is that Poconos doesn't really have something that is pulling people in, other than the fact that it's secluded. And the exact same thing is for Blue Ridge. It's just secluded, right? And so since people don't care about being secluded anymore, they're okay with not going to those places. Whereas places like Gatlinburg, which is also secluded, but beside the Smoky Mountains, those kind of places are doing really well still. They stayed consistent year over year. Right.
I brought my daughter out to Gatlinburg a few months ago, and I was shocked at how many people were out there in the town and what they have going on out there. And then I looked into Airbnbs out there, but the prices have skyrocketed too, right? So that brings me to my next question. How can you go find a second home that you're willing to put on Airbnb in the right price range? Are we still looking in vacation spots, or are we looking more in cities?
Okay, so my take is cities right now are rebounding, yes, right? But in my mind, they're the exact same idea. It's the exact same idea as the people that flock to Blue Ridge. There's nothing in Blue Ridge. There's also nothing really in Milwaukee. Like there is, but there isn't. Do you know what I mean? And so for both of those areas, I wouldn't want to go to either, because long term, over 5-10 years, there's not really a lot of tourism demand. There's an overcorrection towards Milwaukee. And 2 years ago, there was an overcorrection into Blue Ridge because COVID, but not anymore, right? So what I'm curious about are these markets that have things tied to them that are not going anywhere, right? And that are going to keep pulling people in, right? So like absolutely amazing beaches that are going nowhere, that people are going to want to keep going to, national parks that people are going to keep going to, the Waste Management Open golf tournament out in Scottsdale that's not going anywhere, that drives a crazy amount of people there every single year, right?
I just learned about that this weekend. Actually, somebody was telling me about the Waste Management Open. I'm not a golfer, but my buddy's an avid golfer. I guess that is one of the biggest draws in professional golf, huh?
Yeah, apparently. I'm not a golfer either. So apparently, and like a crazy amount of people go out to Scottsdale, Phoenix for just, that one time period. But like the way that I kind of think about this is that that is not moving. It's not going to a different part of the country. It's continued to be in the Scottsdale area, which means that for 1 month-ish, I don't know exactly how long it is, but in the month of March, there are so many people that go to the Scottsdale area that they need Airbnbs there, right? They can't ban them. Like they literally wouldn't have a place to put everybody. And so they need them. And so because they need them, there's so many of them. And so because there's so many of them, it creates all this tourism for everything else that people can do throughout the year when the waste management tournament is not going on, right? And so that kind of compounds on itself and it kind of keeps going and going. And so like those are the kind of areas where one, you see them continue to be stable even through these changes. And like they're going to continue to be good year over year over year, right? And I'm not worried about it falling apart or everyone disappearing the next year.
John, so during the pandemic and as a result of the pandemic, have you noticed the concentration of Airbnbs flowing away from metropolitan areas and into more rural beachside areas?
Like during the pandemic, were they? Sorry?
And following up till today?
So they were without a doubt during the pandemic. But as of May of 2022, it somewhat has shifted. So they have stopped going there as much as they were before.
John, let me segue now into this other discussion about Airbnb. So when Airbnb was an adolescent, let's say about 10 years ago, and they would enter these metropolitan areas, they were like that loud mouth at a bar. They'd go into these condos and these co-ops, like, don't worry about the rules, just rent it to us, right?
Right.
And they created a lot of political turmoil because they were ostracized. I mean, a lot of people were getting fines. If you owned a condominium and you rented vis-a-vis Airbnb, you were getting fined. How did they clean up their image to being this nice, preppy, postgraduate with a cashmere sweater over his shoulders?
That's a great analogy. So I think with anything new that people want, there's a disruption, right? So there's sort of this like hurdle that you have to get through with the change, right? So Henry Ford said that if I gave people what they wanted, I would have given them a faster horse, right? But people wanted a car. And when cars first came out, there's a million issues with like, how are we going to deal with this car thing? You know what I mean? But it was so good and so many people wanted it that they figured it out essentially, right? The rules came into play. People figured out like, how do we deal with this? And they put things together. And I feel like Airbnb is sort of a similar thing where it was something that people wanted that they didn't know that they wanted. And they did it really well. And that caused a lot of issues at the beginning that people didn't really have an answer for, but they figured out an answer. And over time, going through these issues, they kept figuring out answers and Airbnb played ball. They went up, in Chicago, they worked directly with the government. Like you can't list an Airbnb without it getting approved and having like your registration number. And that's right on Airbnb. You got to post it on Airbnb before they allow you to post like to show your listing, right? So they played ball, they listened, they heard what everyone wanted, and they kind of figured it out over time. And then enough people, it's like these people who were taking over these condos and opening up the Airbnbs and just thinking they can do it without saying anything, got burned and got screwed and realized like, oh, I can't do that again. And I'll tell you, I made that mistake. Without a doubt, I was one of those idiots and I regret it big time. But like me and my buddy, we were opening up the first one in Michigan. We were like, this is going to be great. We're going to get it going. We had like spent like 2 months, like getting everything ready. And then all of a sudden we find out that we can't do Airbnb there. And we're like, all right, well, let's just not say anything. Let's see if we can get away with it. Right. Like you're just kind of like into it.
It's better to ask forgiveness than punishment, right?
Exactly. And so we're like, let's just go for it. And huge mistake. Like don't recommend it to anybody whatsoever. Within 1 month, we had an eviction letter slid under the door, rightfully so. Turned it into a corporate rental, ran it for the rest of the year to the end of the lease, and then moved out, right? So I don't know. I guess to answer it is that anything that is a disruption, you have to get over that hurdle. Once you get over that hurdle, if it's actually done well, it gets better and better and better and better. And I think that's what's happened with Airbnb.
It's extremely important that everybody listening, if you're thinking about getting into Airbnb, go out and do your own due diligence, because every state, city, county, and HOA are going to have different rules out there. And the last thing you want to do, whether you're doing arbitrage or you're buying something, is make sure that you can actually have a short-term rental than saying, oh, I'm going to take my chances, because you could lose a lot of money that way.
Without a doubt. So I always actually tell people that there's a 3-step process to Airbnb. Step 1, regulation. Ensure that you understand your regulation, you know what you're doing, and where you can do it. Step 2 is data. Make sure you understand the data so you're actually getting profitable locations, and then start focusing on the operations, right? Step 3 is operations. Operations you can figure out once you have the Airbnb. You don't need to figure out what kind of message you need to send a guest before you even know if you could actually open up an Airbnb, or if you know where the actual right Airbnb is to open, because operations is easy.
Yeah, well, operations is extremely important too. And one thing that I get from speaking with, a lot of people in real estate that are used to doing long-term rentals is that they have less maintenance. There's less turnover. They don't know where to get the cleaning service from. It's just more hurdles for them to jump through. But anything worth doing is going to be hard at first. But one amazing thing about Airbnb that I've learned is it's created an entire ecosystem of sub-businesses underneath it. For example, for my cleaning, for my Airbnb that I have in South Florida, there's another website called Turnover Airbnb, where I'll have 5 people bid on the job to clean that day. So everybody was worried about that I spoke to originally is, what if the cleaning lady can't get there that day? I have 6 other ones lined up ready to do the job behind it. It's created this entire ecosystem, and it's actually made the county's money, the tax it, because I have to pay, tourist tax where I am. It's created jobs for these cleaning companies. And rather than cleaning something once a week, some of these cleaning companies get to clean the place 2 to 3 times a week, which creates more revenue and goes back into that local economy. So I'm a big believer in Airbnb. One concern I do have, though, right now is the state of the real estate market and where it's at. Okay. I think a lot of people learned about Airbnb over the last 24 months, right? They started jumping in. A lot of markets were high, as we already covered, right? And I think if this recession hits a lot harder than it is right now, second homes are going to be the first one to go. So do you actually get into the market right now and go to look for an Airbnb to buy it where we are, or do we hold off for a little bit? What's your thoughts on that?
Depends on how much money you have and how much risk tolerance you have, right? So for you, obviously right now everything is shifting. We all know that. The market is moving down. Real estate markets don't just drop like stock markets, right? They gradually go down. So it's going to keep kind of gradually going down for a little while. We don't know where the bottom is. And we don't know how much worse things are going to get, right? And at the same time, if somebody is offloading their second home, it's not like they're just going to offload it for like a huge major discount. They likely will do their best to try and get the most that they possibly can for it, right? And their money back or whatever it may be. So it's not like there's just going to be crazy amount of deals all over the place. But if you think about it in the long term, right? And you're like, this is how we're thinking about it from the fund perspective, right? We're planning on holding this property for a long time. We want to find a property that without a doubt can cash flow. We're extremely strategic about what properties we actually will allow to pick up. And it's not just like, okay, it's a 4-bedroom in Scottsdale, let's pick it up, right? Because it's on the market. No, it's like it has to have all of these really specific features that makes it the best property in the area. So if the recession's hit, right? And it's going to keep hitting, but people are going to keep traveling. So they're going to keep using Airbnb. And so what's going to happen is, even if people use Airbnb less, there's still some people going to be using Airbnb. So how do you be the one that gets booked over everybody, right? There's certain things that you need to have, and features and amenities that you should have that allows you to be like one of the best in your market, so that even when the demand drops, that little demand that's still left over, you're going to get, right? And you may be making a little bit less, but you're still going to get the bookings that you want to get. And you're going to be able to keep cash flow. You're going to be able to carry it through this recession. You're going to be able to make sure you're covering all your bills and still walk away with something. And then when things kind of pick up, you're just going to keep doing better, right? And then when the next time that we hit another cycle and everything goes down, you'll be in the same similar boat, right? So that's why, like, for the fund and why I'm head of data is because I'm extremely strategic about what we allow to pick up and what we don't. And I'll give one really, I can't really give this away, but I can give away like the generalities of this, is that there's a certain market where if the backyard is a really good sized backyard, like I'm talking a large backyard, right? And everything else is the same. Like the house is the exact same. Everything else is the same. There's a $60,000 difference just because of the yard size. And you create this sort of oasis, right? And so if you have that yard at the right price, you're going to beat everybody else when everything starts to go down. And so that's sort of like the safety net that we think of when we're buying these places, to ensure that we can make it through this time period.
Now, when you guys buy a place, are you looking to do something where you have to put some work into it, right? Or
Yep, almost always.
okay.
Almost always.
So you guys, so if it needs a hot tub, you guys are going out purchasing a hot tub, you're putting it in, right? All the fixed costs that go into it as well. You're not buying turnkey, because what I've been seeing recently pop up is the secondary market for Airbnbs, where they have a track record of, 12 to 18 months. And they're trying to sell these houses at 30 to 40% above what they're worth.
Yeah, that freaks me out, man. I would never buy one of those ever, because you don't have any built-in equity. You're buying it at the top of the top. You're relying on that person's past experience for it to work out. And if it's a really great Airbnb, why are they selling it? You know what I mean? Like, really, like, I get it. Maybe you're trying to upgrade or something like that, but if it's doing amazing, you're not letting that thing go, right? So in other words, you're getting the medium properties. You're not getting the top of the top. But it does freak me out a little bit. But that doesn't mean that it's not a good thing, okay? Because like, I'll also say that we have a certain threshold of like properties that we look for, but we also have people that are looking for a less of a return, and they're okay with that. And we have properties that kind of meet that threshold as well. Does that make sense? Right?
It makes a lot of sense. It's all based upon risk tolerance, right?
Yeah, exactly.
John, Matt, this conversation is aimed to the both of you because I trust Matt's business acumen. And John, you're a millennial. Has the American appetite in how we consume changed? Some of the more popular apps are rideshare apps and Airbnb. Do you think that the new generation of American consumer is veering away from acquisition and actually enjoys this experiential sharing economy?
I think it has for years, honestly. And I think COVID just accelerated it, because what you see right now is we're talking about vacations mostly, right? But people are renting out Airbnbs when they can work remotely for a month, 2 months at a time. Mine personally, I had somebody come in and they asked for, 60 days, right? They were a traveling nurse and they're going to work down there, that other people come in and it's not just a couple of days, it's 1 to 2, 3 weeks. So yes, the answer is, I think we surpassed that 5 years ago.
I was thinking the exact same thing. I'm like, I feel like that was answered years and years ago, where people have been saying forever that millennials are just spending their money on experiences over acquiring things. And it just keeps going that way. And these apps allow you, they actually like take that potential and they harness it, right? So it's like, oh, you don't need a car, but sometimes you need a car. So we'll give you a car when you need it, right? And it just makes it a really easy, frictionless way of being able to do that. And
so then what is the current American dream?
I'm not an American, so
I think everybody still wants to own their own home, right? But I think the American dream overall is not about home ownership. I think it's the pursuit of happiness at the end of the day, just like it says. It's you're not guaranteed happiness, but pursuing it is the American dream.
My partner is quoting Thomas Jefferson. John Bianchi's quoting Henry Ford. I mean, this is the best podcast ever.
So interesting while we're on the topic of it, right? So I was just recently, I was over in Spain. I was in Europe, right? I was looking at some properties in Europe because of the decline in the dollar, the decline in the euro compared to the dollar recently. And there's a big Airbnb market over there as well. So have you guys lived in Europe at all?
I'm going through Lisbon, Portugal as of this week, like just started, but I already just had like a high overview, like the report that I was showing you before the call. I have one of those for Lisbon, and all the numbers are like half. It's like, so I don't know what the market looks like yet over there. So I'm trying to figure it out, learn it. So what I'm trying to say is the revenue is a lot less in one of the most popular places ever. And I thought it would be the exact opposite, right? I thought Port Lisbon would be like way more profitable on average. but it's a lot less. And so I'm trying to understand why that would be. And then on top of that, I'm trying to understand, well, is the price of real estate just a lot cheaper in comparison? So it still evens itself out, and it still works, right?
Yeah, that breaks it down to like, what are you investing for? Are you investing for cash flow? What do you want appreciation of the property over time? You know,
Yeah,
I always look for cash flow. So
I was gonna say, like, we're pretty much buying like for cash flow, but we're also getting built-in equity by the upgrades that we put into the property, and then we're holding it over a long period of time, right? And in some markets where they appreciate more or faster, we're willing to take a little bit less of cash flow.
nice.
Cash on cash.
You know, John, we always like giving the audience a couple different takeaways. What are 3 of the top data points that they got to look at right off the bat if they're considering jumping into the Airbnb space?
It's a good question. So, okay, that's a good question, and there's a lot to it. You want to make sure that there's demand in your market, right? Like, you want to make sure that there's like a reason for people to come into the area. So whenever somebody hears the word data, they think of numbers, but data is everything, right? Data is like, can literally be anything. So like, why are people coming to your area is a data point that matters that you should be considering, right? And if you're going to be purchasing, like I said earlier, like, you want to find a place where there's going to be demand for years and years and years, and tourism demand, right? Not just like random demand. You want people actually, because people pay a premium on vacations. That's just how it is, right? And that's where the real money is actually being made. So that's the first point, that a data point that I think is really important. The other one is just trying to figure out, on average, if the area makes a lot of money or not, right? So there's ways on like AirDNA, the website AirDNA, that you can see what people are making on average across the entire market if they're making a decent amount of money. So as an example, in Indianapolis, the average is like almost $2,000 a month, which is pretty low. And there's only about just over 1,000 properties. So it's, you know, the average is kind of right in the middle there, right? And so the further you get away from that average to the top, the more money is being made, but you're only going up about 500 more homes. So it's not really getting that much higher, right? So in my mind, Indianapolis, there's not a lot of money being made there. Now in Chicago, as an example, the average is about $2,500 a month, which is higher, right, than Indianapolis, but not much higher. However, there's 6,000 properties there. So if the 2,500 is the middle number, the further away you get from that middle number to the sort of higher end, there's 3,000 properties more that it's kind of can scale and grow from. And so what I mean by that is that that's telling me that there's likely properties in Chicago that are doing really well the further away I get from that sort of middle number to the top. And so then therefore I can probably find some really high performing properties, and high performing properties are where you're going to make the majority of your money. And so that's kind of how the way I think about it and how I look into those different markets.
I was going to say I'm going to have to listen to this episode again after we put it out, but I'm just going to hire you. You know, on that note, why don't you tell the audience how they can get in touch with you? Because I'm sure you're going to have a lot of people hitting you up. Is it DM? Is it email? Can they find you on the socials? Why don't you let everybody know?
Yeah, so I recommend everybody to just shoot me an email, and we're going to hop on the 15-minute free consultation call. So my email is hello@pointanalytics.co. So once again, that's hello@pointanalytics.co. You reach out to me and let me know where you came from. We'll hop on a phone call. We'll do a quick consultation, and I can I can answer any questions that you have. But the real, my business is these reports that help you figure out where the most money is to be made within your market, right? So yeah.
So John, you started out, you're a financial advisor, right? You had a side hustle with Airbnbs in Chicago, led to a course, led to you becoming head of data for a hedge fund. What's next, man? How are you thinking? What's on the horizon?
My own portfolio. So I want my Airbnb business back so bad. So I had about 15 locations. I sold off that portfolio. Wish I didn't do that. Hindsight's 2020. And so my goal now is to just build up my own chunk of homes that I personally own. So I'm not doing arbitrage, not doing management. I want to personally own these homes, whether I own them all myself or I jointly own them with different people who, want to own these homes together. But I'm going out there and I'm looking at properties constantly. If the fund isn't going to pick it up, I'll pick it up. Right. And so I'm planning on building out my portfolio over the next 5-10 years. And that's sort of my long-term game plan here.
John, we really appreciate you being here. We want to be respectful of your time, but I have a question for you before we let you go. Okay. Describe yourself in one word.
God, I don't know. Gritty. I think that's, yeah, gritty.
Awesome. John, thank you. Hey, everybody, that's a wrap of the Liquid Lunch Project. We'll see you on the next episode.
Thank you for listening to the show. And make sure you subscribe, leave a review, and share it with a friend. We'll see you on the next episode of the Liquid Lunch Project.